any question you have about your stocks, about investing. And what I'm going to also do is I'm going to talk about a couple of assets that I believe are worthy of taking a look at, that you can take a look at and invest in. If you log in at the blackstockmarketprogram.com, there's a section called What Dr. Boyce is Buying. And that's where I give you stocks that I believe in, stocks that I believe are going to do well and make money. So you can feel free to take a look at that as well if you use your login. So put your question in the Q&A section so that we can dig in and start talking. Now, right now, the market is down a little bit today. Not by much, though. Not by much. A lot of the conversation now surrounds the Fed's next move. The expectation is that the Federal Reserve is going to start reducing interest rates, and that's mainly because the economy is showing some minor signs of slowing down, and inflation is also slowing down. So, given that those two are slowing down, it's now seen to be relatively safe to reduce interest rates. Now, what the Fed does not want to do is they don't want to overdo it. They don't want to go too far with their interest rate cuts because that can spike inflation again, which there is an absolute no-no. So they're really being extremely careful, but that's what people believe. And the big question is not whether or not the Fed is going to reduce interest rates. The question is how much are they going to reduce interest rates by? If they do half a point instead of a quarter point, everyone expects a quarter of a point. So if they do half a point instead of a quarter of a point, that's going to lead to a rally in your stocks. You're going to make money off that. Good things are probably going to happen in your portfolio if they decide to go to half a point instead of a quarter of a point. The other risk factors might be things like volatility, geopolitically speaking, stuff with China and the Middle East and all that. That's always kind of a risk factor. But overall, though, the market's looking really good and a lot of money's being made. A lot of the money that you lost or that you might have lost last week, you gained it right back. And if you recall, when we were talking about that, I was mentioning that I don't think you should panic. I don't think you should overreact. I think that typically buying the dip is usually the best strategy. That's usually the best strategy. And another thing I wanted to mention, in case you didn't know, is I do have a podcast on Spotify called Dr. Boyce Daily, where every single day I just sort of give you some quick updates on the market and what's going on. So if you'd like to just search for my name, Boyce Watkins, on Spotify, you'll find Dr. Boyce Daily. I also have another podcast called the Dr. Boyce Breakdown. So I pretty much just put stuff up there periodically so that you will know what's going on. You can kind of stay briefed. Also, later on in the conversation, I'll give you a stock or two that I believe in, a stock that I'm actually going to buy while we're speaking. So what I'm going to do is hop in and look for your questions. Put your question in the Q&A section. Good morning, Zakia Ali and Natasha. I see you, and Amani's in the chat. Amani is from our team, our support team. And so she can answer any question that you have about your Black Business School membership. And just as an FYI for today and tomorrow, if you go to our bookstore, you can actually get 60% off anything in the store. Just use the bookstore URL is drboycebooks.com. So type that in, drboycebooks.com. And if you go to checkout, use the code MORNING123, MORNING, MORNING123, and that'll give you 60% off pretty much almost everything in the store, all the books. I think you might even be able to get your A, B, and C tickets at a discount. I'm not sure if the code extends to that, but if it does, then it does. So, but the A, B, and C, the All Black National Convention is almost sold out. If you want to join, it's going to be in Chicago, Illinois, October 25th to the 27th. And if you want to join us, you may want to go ahead and lock in your tickets now and bring your family and stuff. We have some really great people there. Ace Chapman, who is an expert on business acquisition, he's going to be there. Lamar Tyler, who is I call him the Black Millionaire Maker because he's got this big organization full of all these Black people that started these multi-million-dollar businesses. He's agreed to speak. I like Lamar. He's a friend of mine. And also there are just so many other great people. They're just with such great backgrounds. Constance Carter, who's a real estate expert, will be there. And we're also going to have therapists and medical doctors and attorneys and estate planners and all kinds of people. Literally probably 30 breakout sessions that you can join at the convention. So it's a lot of fun also. All right. So Ilchris says, do you think Affirm is a good long-term stock investment as well as stock options? I do own Affirm as a long-term investment, and I do sell options on Affirm, and I generate a decent amount of money selling the options on Affirm. Right now, that stock is going way, way up. In terms of it just being a good long-term hold, that I cannot say for sure one way or the other. I can only say that for the most part, like the last few weeks anyway, Affirm had been doing really well. But actually year to date it's down 36%. But over the last year, it's up 100%. So it's hard to know. These stocks like Affirm are very, very just schizophrenic almost. And the analysts are pretty much split on whether or not it's a good long-term investment or not. The company is definitely losing money. So if so my view on a stock like a firm, or the way I handle that, is I handle it the way I would if I had a wild Bronco. I might want to own the Bronco, but I'm going to make sure I have controls on the Bronco to protect myself from it. So with stocks like that, you're just dealing with a really extraordinary amount of risk that could end up backfiring on you. And I would encourage you not to jump in if you're not prepared for the fact that this $30 stock could easily become an $18 stock or a $14 stock. Okay. And the way you present that is things like put options and stuff like that. And so that might be kind of a way to approach that. But if you're interested in stock options, you want to learn how to generate income from selling stock options, you can go to drboyceprime.com, or there's actually a training called How to Make Money Without Working. It's totally free. Just text the word options to 87948 and we'll send you the training. So text the word options to the phone number 87948 and you can take a look and see if you like it. If you like it, I encourage you to dig deeper into it. That's how I make my money. That's what my wife and I do. All right. So let's see. One thing I wanted to mention that I thought was really interesting is Starbucks. Did anybody give me a yes if you followed what happened with Starbucks? Starbucks just got a new CEO. Did anybody follow what happened with Starbucks? It was really crazy, sort of what happened. They literally replaced their CEO, who, unfortunately, this guy was just pretty terrible. And he just wasn't getting the job done, and the stock was kind of being hammered because of it. And Starbucks was being seen or being hit with some reputational problems because their stores were getting packed to capacity, and people were not happy with just anything about Starbucks. In fact, I think about this. My wife and I own a property in Atlanta, and there's a Starbucks around the corner from the house. And so one day we were just staying at the house for a few days, and I was like, "Oh, this is great! There's a Starbucks right around the corner. I'm gonna, put on my backpack, walk over there 2 o'clock in the afternoon on a Tuesday, grab me a good cup of coffee and do some work, right? Starbucks is good for that. Well, check this out. So I get there. Sorry, I got a smudge in my glasses. So I get there and it's 2 p.m. in the afternoon. I kid you not. And they literally have this freaking sign on the door that says, uh, we don't have enough staff, so we're closed for today or something. Or the only thing that's open is the drive-through. And it was me and a bunch of other people standing there expecting to walk in and get some coffee because it's 2 o'clock in the afternoon on a Tuesday. Who expects Starbucks to be shut down 2 o'clock in the afternoon on a Tuesday? But they didn't have enough staff working, so they literally shut down everything except for the drive-through. And this happened on multiple occasions. And I said, "Ooh, Starbucks is slipping. This is bad." And because not only are they sort of screwing up on this staffing front, but Starbucks is a premium product. That is premium coffee. Like, people give Starbucks a lot of benefit of the doubt by going in there and paying $7 for a cup of coffee that nowadays you can get a cup of coffee just as good at McDonald's for $3 or $4. So they're already kind of on a slippery slope in terms of people sort of waking up and saying, "Gosh, why am I paying so much for this coffee?" They were kind of doing it out of habit. It's almost like you're in a relationship where where you clearly know you could do better, but you don't think about it because you're there and you're comfortable and you don't feel like switching boyfriends or switching girlfriends, right? But then one day the person starts acting a fool. And then you wake up and you go, "Wait a minute, I don't even have to be here. Like, I can actually do better than you anyway." Right. So it's kind of like that with Starbucks. So Starbucks was dealing with a lot of issues like that. And so what they did was they made the right decision. They went ahead and they got rid of their CEO, and they did something that was really, really interesting. They went and they hired the former CEO from Chipotle, right? Which was crazy to me. And that was a great move because I've talked to you guys about Chipotle before. Chipotle is a well-run company. I mean, they nailed it during the pandemic. They did a really great job, in terms of really being able to just make money when everybody else is losing money. And so let me show you what happened to Starbucks stock when they hired this guy. I think his name is Brian Nichols. I'm gonna pull up some information so we can talk about him. But here, look at this. You see this jump in the stock price? This is what happened when they hired this guy. The stock price went from $77 to $95. Now here's the interesting part. Brian Nichols' pay package. Um, give me 1 second here. Brian Nichols' pay package was ridiculous. It's absolutely insane. They're paying this man in just an unbelievable amount of money. I want to say he's making like well over $100 million. His base is only 1.6 million, but he got a cash signing bonus of 10 million. And then he's going to receive equity awards of a totaling 75 million. And then there's a bunch of other stuff. He has an annual cash incentive. He has the opportunity to earn an annual cash incentive with a target of 225% of his base and a maximum of 450%, which equates to another 7.2 million. He could potentially make up to $113 million a year, right? 113 million a year. How many of you think that's a lot of money? How many of you think that that's a ridiculous amount of money for anybody to make? 113 million a year. There's no player in the NBA, I don't think, that makes over 100 million a year yet, right? Is there any NBA player? I think Patrick Mahomes might make close to 100 million a year or something like that in the NFL. But what do you think? Do you think that that's too much? Give me a yes if you think it's too much. Raise your hand. I'm gonna raise both hands because I think it's too much. But I'm probably just a hater. I'm just mad because I ain't never made 113 million. I work as hard as you, and nobody pays me 113 million. So I'm just being a hater right now. But listen to this. So let's process it this way. Let's think about it like this. This is the magical financial math. So I want you to go back to the screen here, and I want us to take a look at the stock price movement on the day that they hired Nickel. The price went from the stock price started the day roughly $77, ended the day at $95. So let's write that down. That's $18 per share. Okay. That's the, that's the day one stock price jump that resulted just from the information that he was going to be the CEO. Man hasn't done one single thing, hasn't signed a document, hasn't made a single decision, hasn't even shown up for work, hasn't even had his morning coffee yet, and the company stock price goes up $18 a share. Now, what I want us to look at here is, let me see if I can find the number of outstanding shares that Starbucks has. Let's see here. Let's see if we can find this on the chart. Okay, maybe it's not on this page, but I will find this out in 1 second. So Starbucks has a total of, I'm looking it up right now. Okay. They have a total of average volume. Okay, I see the market cap. I'm looking for outstanding shares. Okay, they don't show me outstanding shares. So let's do it this way. Their market cap is $105.9 billion. Now, the stock price, pay attention, it went from 77 to 95. So 18 divided by 77. Let's see what that is. 18 over 77 is about 23%. So if you just do an armchair calculation, just arm waving, basically the company's value, drum roll please, get ready. The company's market value went up about $25 billion, maybe 22 billion, 23 billion. What's a billion between friends? The company's market value went up by at least $20 billion just based on the news that they hired this guy as their CEO. Just the fact that he walked in the building, over $20 billion in wealth was created. Now, I want you to process that for a minute. And I want to ask you this question again. If you are trying to make as much money as possible for the shareholders, and you know that offering this guy $100 million a year is going to cause an instant $20 billion bump in value for your company, do you think that that will be a good financial move? Yes or no? Do you think that, assuming the stock price doesn't collapse, assuming that the market establishes a new equilibrium, do you think that that's a good trade-off? We're going to give you 113 million a year, and you're going to make us $20 billion more valuable just right off the jump. I would say yes. I'm going to go ahead and just pound the gavel and say yes. Good job, Starbucks. And this is how markets work. This is the crazy thing about the stock market is it has this magical ability to translate information into economic value. The stock market is a financial time machine. It can take possible value from the future and translate that into real value in the present. There is no guarantee that this guy is going to be able to help them sell more coffee. There's no guarantee that he's going to turn this company around. For all we know, he could die at his desk tomorrow. But that $20 billion that suddenly appeared out of the air is 100% real. But it was built literally on the expectation of what this guy's going to bring to the table. And that's what makes markets very magical. That's what makes them almost like a form of quantum computing, because they're able to take that which is not real and turn it into something real. They're able to take something from the future and bring it to the present. They're able to take ideas and information and translate that into real money. This is the power of markets. Do you understand? This is the power. This is why anybody who wants to know wealth, anybody who wants to be successful, really, really, really needs to understand financial markets. You need to understand investing. When you guys sell stock options, you're able to sell out of the money call options, options that aren't even they're not even valuable yet, but you're still able to translate that into real money. That's pretty amazing to me. And so this is, to me, is interesting, because this is the part about investing in the financial world that a lot of regular people don't understand. See, a lot of us were raised to falsely believe that the amount of money you make should be connected to things like how hard you work, or how important your job is, or whether you're a good person or a bad person, or how many years of experience you have. All that stuff's made up. All that stuff's made up by your boss. Your boss makes up those rules. Seniority means you get this much money, number of hours, and all that. That's an economic model that tends to be shared with us, when we're kind of from the working class. And I say we because I was raised in that same space. But in the financial space, the math just really changes a lot. And how much you get paid is not about how hard you work or how many hours you spent. It's about what sort of value you're bringing to the table. And so if I know that hiring this guy is going to increase the value of our company by $20 billion, then hell yeah, I'll give him 100 million. I'll give him 300 million. Because I'm not paying them like the same way I would pay a school teacher or a truck driver. You understand? Shout out to the school teachers and shout out to the truck drivers. If I could pay you all $1 million each, I would, because I think your work is very important. But unfortunately, in the financial world, things kind of change a little bit, and I want you to understand that. All right. Now, put your question in the Q&A section of the chat. And also, Amani has it looks like Shaquana has a question for you, Amani, about the Black Investors Cup. In case you all don't know, the Black Investors Championship started yesterday. So you can log in at blackinvestorscup.com and go ahead and start buying your stock. And when you are making your money, it's going to appear on the leaderboard. It's a 6-week competition. The best investor wins. Everybody gets $50,000. It's too late to enter now, so I'm sorry if you want to enter today, you can't. But basically, it's a competition. The winner gets the big Black Investors Cup. Also, you get lifetime access to the Black Business School. So we're going to have first prize, second prize, and third prize. And it's an opportunity for us to have some fun, have a good, healthy, fun competition, see who the best investors are, and also learn about investing. So feel free to follow the leaderboard at blackinvestorscup.com. There's also a community connected to that. So, Monty, if you could share the information about the community, how people can get access to that, I would appreciate that as well. All right. So let's see here. More questions. Let's see. Kalu says, in simplest terms, how do I sell puts on a stock that I own? It's hard to do that in simple terms. Exactly. Tonight we're doing Prime 101, which is a beginning class on how to sell stock options. So Amani can now Amani says she can't see your question. Shaquana, it's from Shaquana. So it's right above your question, Amani. I see it right here in the chat. So just scroll up, Amani, and you should be able to see it. It's right up there. Yeah. So in terms of how to sell stock options, today we're doing something called Prime 101. If you want to get an invitation to join Prime 101, just get on the text list. Let's see. Text the word options, OPTIONS, to 87948, and I'll send you guys an invitation. We're going to do that tonight, and I'm literally going to show you exactly how to sell puts, how to sell calls, things like that. And then also that training, how to make money without working. If you text the word money to 87948, 548. You'll get that training sent to you via text, and you can watch it on your phone, and it'll kind of open your door to how to get that done. Where do I go in the Black Business School to find out how to do so? There we go. Okay, so that's your information. Also, drboyceprime.com. That's our program on how to sell stock options, and it's pretty cool because you can make money tomorrow. You can learn something today and literally apply it this afternoon and have more money this afternoon. It's that straightforward. And a lot of people don't know that this market exists and how it works. And so that's the advantage of having a PhD in this stuff, is this is all the stuff that we studied in school. All right, so let's see here. Natasha, if I only want to take profits from a stock, do I keep the same amount of shares? It's hard to take the profits and keep your shares, because in order to get your profits, you're going to have to sell some shares, right? So you're going to have fewer shares than you had before. You might have the same total market value of your investment that you had before. So profit taking might mean selling a few shares. You have 1,000 shares, maybe you sell 20 or 30 to make some money because the stock is doing really well. You also could sell options on the stock. Sometimes people will sell call options, and that's a type of profit taking as well. So there's different ways to kind of do that. What's the ticker symbol for a firm? Asked Barbara. I think it's AFRM. AFRM. That's the ticker symbol. Let's see. Okay, Melissa's asking Amani a question about the leaderboard for the Black Investors Cup. So if you, Amani, could answer that for Melissa, I'd appreciate that. Thank you. Justin, what is the difference between selling a call versus selling a put? Do I own the stock when I sell a call versus when I sell a put? Selling a call is basically where you're selling the upside. Selling a put is where you're selling downside. But really what you're also kind of doing when you sell a call is you're taking like a business partner. You're basically allowing somebody to pay you money to make a bet with your stock. And what they're doing is they're betting the stock is going to go past the strike price on the expiration date. And if you sell a put, what you're doing is you're selling insurance. You're basically guaranteeing a price floor for someone who buys the put. And so the options market basically allows people to transfer risk back and forth. So the same way that the stock market is a time machine, and it allows you to turn money ideas into money, or sell something that doesn't exist. You can also sell risk. You can sell and buy risk back and forth. So the options market helps you do that. Can you explain the market cap and the VIX? Yeah, market cap is the total number of shares outstanding in the company times the price per share. So if a stock is $1 per share and they have 1 million shares outstanding, then that's a $1 million company. Everybody that buys a share of stock in that company owns a piece of that company. So this is the best way and the fastest way to become a business owner in America. If you want to own a business, you don't have to start a business. You can simply buy a piece of a business. Now, Monty, did you get a chance to answer the question from Melissa? I'm going to go ahead and remove Melissa's question from the feed. But I assume that you and Melissa Johnson has a question about where to find the leaderboard for the Black Investors Cup. So I know if you log in at blackinvestorscup.com, there is a link where you can check out the game and the leaderboard and all that good stuff. Okay, so one stock that I'm gonna buy shares in right now is, let me see. Hold on, where is that freaking thing? Yeah, I had a stock and I wanted to share it with you guys, not because I'm telling you to do it, to buy it. This is not investing advice. I do not give investing advice. I want to make that clear. But the stock that I'm actually going to buy some shares in right now is a company called Nice Technologies, NICE. That's the ticker symbol. And so what I'm going to do literally while we're talking is I'm going to hop in and buy some shares, because the market's down just a little bit, not much, but down just a little bit. So when it goes down, I tend to buy more because I just believe in buying the dip. That's my philosophy. Doesn't mean it always works. Sometimes it doesn't, but long term, it does tend to work. And and also the other thing too is I like to just buy stock the same way you just buy food. I was explaining to our 20-year-old today. He was telling me about the stocks that he bought. He's 21, I'm sorry. The kids get older. Their ages keep changing. That's kind of strange. But anyway, he was telling me about the stocks that he bought, and I said, that's really great. I'm really proud of you. I said, but what I also want you to think about is, with investing, I want you to think of it like eating. I said, now if you eat one time and you eat a really good meal and you're really full, does that mean that you don't have to eat again for the rest of your life? And he kind of laughed. He said, no, I got to eat. I said, yeah, you got to eat again, right? And he said, yeah. I said, yeah, you eat every day. I said, so with investing, maybe you don't invest every day, but you got to invest like once a week, at least once a week. And even investing every day is not, there's nothing radical about that. There's nothing strange about that kind of behavior. So really, if you want my opinion, um, I think that the more frequently you're buying stock and the more consistently you're doing it, the better off you're going to be because what you're doing is you're consistently owning a piece of America. You're consistently doing it. And the big thing too is you don't want to be timid about it. I think you have to be assertive about it. You have to be as serious about your investing as you are about your financial security. So, if you are a person who makes $80,000 a year and you're spending, $500 on your car note, $250 on your cell phone bill, $1,800 on your rent or your mortgage or whatever, then why would you put $20 into your stock portfolio? Why are you buying 20 or $30 worth of stock? Because if you write things based on economic importance, what you're doing is you're putting yourself last. You're telling me that the cell phone bill is more important than your financial future. You're telling me that that car matters to you more than the ability to have financial security for you and your kids. No, I think that the investment portfolio should be right up there with the car note or right up there with maybe even with the mortgage, right? Be aggressive with that. And then also the power of the side hustle is important because what the side hustle does, if you get together with family, you learn how to create a side hustle, then you can make extra money. And then you make this extra money, you can just invest all that money. And that way you're stacking the capital on the back end and still living the same lifestyle. So a little side hustle to me is far easier than getting a raise. Getting a raise takes years to do, it's hard to do, it's not in your control. But if you sit down and you get with some people that also have some interest in starting businesses and you learn how to think like entrepreneurs and you just figure out how to make that extra $1,000, $2,000 a month, it changes everything. And that might be another reason to even look into the whole stock options thing that I was talking about. When we went to Egypt last month or 2 weeks ago, there were families there. There's one couple in particular that came up and told me, they said, we're on this trip with the money that we made from selling stock options. And in fact, there was two people I talked to on that trip, and another one, same thing. He said, oh yeah, I have plenty of extra money now because I'm selling stock options. So maybe that can be your extra stream of income that allows you to kind of do some of these other things. It works especially well if you are a saver or if you have shares of stock that you've bought that are just kind of sitting there. The options kind of give you like that extra tool to be able to go a little bit further with it. So anyway, let me see. Next question. Is CME a good company today to buy stock in? CME, wait, CME, is that Chipotle? I feel like that's Chipotle. Is that Chipotle? No. Why did I think Chipotle was CME? It's not CME. Now, CMG. Okay. All right, CME Group is, let's see, they operate a derivatives marketplace. Okay, Chicago Mercantile Exchange, got it. I think it's fine. I don't have any problem with it. I don't have any problem with it. I mean, I don't see why they would go out of business. Now, what's interesting about this stock though is that if you look over the last 5 years, it hasn't gone up in 5 years for the most part. It's actually gone down 3%. Um, so yeah, so I don't know. I mean, maybe you add it to the portfolio, but never ever think of one stock as the one that's going to change your life. That's not, it doesn't work that way. You buying stock consistently is what changes your life, not one stock. Let's see, Doc, can you explain when it makes sense to buy your covered call back? Um, yeah, we're going to talk about that in prime class, but basically, for me, it makes sense to buy it back if I want to free up my stock, if I want to maintain ownership of the stock. So if I sell the option, then I can buy it back. If the price goes way down, maybe I buy it back to free up the stock so I can do something else with the stock. That's when I tend to buy an option back. And it also comes down to how much cash you have, stuff like that. But also, if you log in to drboyceprime.com, there's 50 lectures I've done on that, and it explains all that, just every scenario I can possibly think of. So feel free to log in at drboyceprime.com. All right, so another stock that I like that I'm going to buy some shares in now, and we're going to do it right now. I like to just do live trading. I'm going to buy a stock in a company called Heritage Global, HGBL. HGBL. So let me go in and type in HGBL, Heritage Global, and I'm typing it in right now into my E-Trade, and I'm opening up the quote, and the price per share is, oh, it's a cheap stock. It's $1.84, so it's a small company. And so I'm curious to see if the market is good, like if the bid-ask spread is okay. But yeah, let me buy some shares of this. Now, again, this is not investing advice. It's just me talking out loud. Since it's $1.84, let me buy a couple hundred shares. And I'm going to make a market order. And it didn't cost me much. It just cost me $370. So I'm placing the order right now. So now I own shares in Heritage Global. Now, if you want to know what Heritage Global is, what kind of company it is, HGBL, Heritage Global, I am now, it engages in the provision of corporate and financial asset liquidation transactions, valuations, advisory services. It operates through the following segments: auction and liquidation, refurbishments and resale segments, et cetera, et cetera. So now I own a percentage of Heritage Global. Okay. All right. One more stock, if you want to know which one I'm interested in. Nkarta Healthcare, Nkarta Healthcare, NKTX. So I'm gonna hop in and buy NKTX right now, and I'm putting NKTX in my portfolio. So let's see what we get here. Okay, now that's a cheaper stock. It's $5 a share. It's a healthcare company. I think it's a pharmaceutical sort of company. So, which means companies like that, they tend to jump in up and down based on the results of clinical trials and stuff like that. And let's see, that stock has gone down a little bit. It's gone down 3% today, 17% this month. So it's really kind of on a downslope, but it's actually been up, up, up. It's up 174% over the last year. So nobody knows what that really means. But I'm gonna go ahead. It's $5.03 per share. So I'm gonna buy, let's buy 150 shares. So I'm gonna buy 150 shares right now, put it in here and buy. So the way I showed you how I just buy stock, I find stuff that looks good according to the analysts. I look into businesses that I want to be into. For example, I believe that if Kamala Harris gets elected, I think they're going to legalize weed. So I bought cannabis stocks. I mentioned some of those last week. And basically, what I'm doing is not not overthinking it, not sort of sitting around and sort of, like thinking one stock or one investment is going to be the biggest thing I ever did. I just want to be in the market. I just want to be in the game. So if you were to ask me, Boyce, can you name the last 50 stocks you bought? I'll give you $1 million. I wouldn't be able to do that because I just buy it as a habit. It's my habit, right? And the way I look at it is, what other things would I be doing with my money if I wasn't investing it? What else would I do with it? Am I going to go spend it? I don't want to go spend it. I don't want to go waste it because if you spend your money, then you're guaranteed to get a negative 100% return. You're not going to get that money back. So buying stock is, if for any other reason, it's something just good to do with your money. You just own assets. You're just buying stuff. You're owning stuff, right? So make sure you're in the game. Heritage Global, it is down over 95%. It could be. And again, this is not investing advice. This was based on some analyst reports that I read. So there are people that believe this company can make a comeback, and maybe it won't. I mean, it's had a rough, like I think this past year so far is down 33%. But there are some people that believe it's a good investment. So I think I saw some analyst reports and I was like, oh, okay, let me buy some just in case. So, and if it doesn't work, then it's $1.50 a share. Think about how many other things you spend $1.50 on and you get nothing for it. But at least with this, there's a chance I'll make some money. Maybe I won't. Maybe it won't work out. But what happens with investing is it's not a matter of winning every time you invest. It's just over time, you want the good to outweigh the bad. And I guarantee you that if you took any 4-year-old and they consistently just bought stock every week and they literally randomly pick stocks out of the S&P 500, that 4-year-old after 10 or 15 years is going to have more money than most adults. That's it. It's that simple. If you want to know the formula for getting rich, it's very, very simple. All right. So anyway, let me look at your next question. If you purchase single stocks and the price goes up, what point would take profit if it's one share? Okay. When you talk about profit taking or selling stock, there's different philosophies on that, and none of them are 100% correct. It's really like religion. Is it more accurate to be a Muslim or a Christian? Well, it depends on whether you ask a Muslim or a Christian or a Catholic or a Jew or whatever, right? So you have to pick your religion. So basically, when it comes to selling stock, here's what the thought process is on whether you sell. There are some people who believe that if you're trying to be wealthy, you should never sell because selling an asset is in contrast to your objective of asset accumulation and wealth building. The reason wealthy people are rich is because they accumulate stuff. That's it. That's the only thing that makes a rich person different from a poor person. The rich person has a bunch of stuff. The poor person doesn't have anything. Um, so in a way, you can think of it like my wife is in great shape. She's I'm very proud of her because she's 50 years old and she wears the same size clothing that she wore when she was 22. And I saw her when she was 22. She was the prettiest thing I ever saw in my life. And the general rule for my wife is that if I put candy in front of her and I say, "Would you like some of this candy?" Generally the answer is going to be no. Why? Well, because her general life philosophy is I don't eat crap like that. Do you understand? Now, does that mean that sometimes she might choose to eat some candy? No, she does. She loves sweet tarts. She says I can't stop eating sweet tarts. Okay. So if I ever want to get on her nerves, I'll bring some sweet tarts in the room. Right. So um and I like to think of myself as her human sweet tart, like I'm all chocolate and sexy and everything. So that's just, I mean, that's got to be irresistible. And if the sweet tarts don't get her, then I will. Anyway, I'm being silly. So the point of the matter is to say that her general philosophy, though, is that the reason I'm in good shape is because I don't do certain things. So rich people are the same way. Rich people are richer typically. I'm talking about most cases. They're wealthier because there's certain things they just don't do that other people do. The same way my wife doesn't eat candy, even though a lot of people eat candy and we have the obesity issue in America. Well, a lot of rich people are rich because they don't give their money away and they don't sell their assets. Why? Well, because their assets are the key to wealth preservation and growth, which is critical for becoming wealthy. So that's a culture, that's an idea. So one school of thought would be if you were to ask me, like, when should I sell my stock? The next question I would ask is, well, why would you do that? Because there are families that have owned Coca-Cola stock for 3 generations. There are families that have owned land. You have black families that have owned farmland since 1870. So that's the first school. And then they won't sell it to anybody. They're very defensive about selling it. The next way to kind of look at it might be this. You might sell for one of two or three reasons. Let me make sure I can get them right. One is what they call liquidity. You just need money, you need cash. So you have farmland or you have some stock and something comes up and you have to spend money on something. So you sell some stock to get some cash to let you go on vacation or to buy a car or whatever. Another reason you might sell is because you just really believe that another investment is going to be better for you than the previous investment. So you just, this is what you call the efficient use of capital. One of the rules of finance and capitalism, even though I'm not really a capitalist, but this is one of the things we used to teach at Syracuse, is that capital must be put to its best and most efficient use. So that means that if I have a house and my house is earning me 5% a year, but I can sell that house, take that capital, and buy some stock that I believe is gonna earn me 12% a year, then I should take that capital and put it to a more efficient use. This is why companies get acquired. When you had Essence magazine, this is why money can't be the only factor in your decision making. Essence magazine was making maybe let's say 50 million a year, and doing well. They were profitable. But then Time Warner comes along and they say, well, we could take that same little business and we can turn it into a 300 million a year business or 200 million a year business or whatever. So they come along and they offer a big chunk of money to buy Essence. And the people, I knew a guy who sold his stake of Essence and he made a lot of money. He said the offer they made was just an offer we couldn't refuse. It was so much money. Now you could have refused it, but if your goal is to just make as much money as possible, then it probably was hard to do that. So basically, you sell stock maybe because you just think there's a better use for your money. The third reason you might sell stock, oh, that's right, is because you have to diversify. So what happens, fund managers, whenever they have a stock, they have a rule pretty much where they can't have more than say 5% of their assets in any one stock. So let's say that you have 5% spread across, 20 different stocks, and then one stock quadruples in value. Well, suddenly that one stock isn't going to be 5% of your portfolio anymore. It's going to be maybe 10% or 15%. So then what they'll do is they'll sell so they can diversify, spread the money out. Or like when Mark Zuckerberg went public with Facebook, he was happy to sell some of his stake because he needed to get to spread out his wealth. He didn't want all of his money in one location because that would break another important rule of investing, which is to make sure you diversify. So never put all your eggs in one basket. So those are pretty much the three major reasons why you might sell. Liquidity, I just need the cash. Two, I think something else is a better investment, the efficient use of capital. And three would be for diversification purposes. I don't want to put all my eggs in one basket. That's where you might sell. But you shouldn't sell just because your stock went up or whatever, or just because you think, okay, it's time for me to stop investing. Like investing is a culture that should just be a part of who you are for the rest of your life. And so a lot of rich people, they just own a whole bunch of stuff. They own a whole bunch of stock and everything else that they've had for years. And these long-term relationships with money is how you actually become wealthy. And so I want you to form a long-term relationship with money and don't just think of it as this short-term lottery or this short-term casino where you make a couple dollars and then you bounce out. Like what else are you going to do with your money if you're not investing it? All right. So let me answer a couple more questions and then we'll bounce on out for today. Again, if you want to get copies of my books or anything like that, or also our financial workbooks or flashcards for kids, today in the Dr. Boyce bookstore, we actually have a 60% discount on everything, including even All Black National Convention tickets. I think there's a few of those over there as well. So feel free to go to drboycebooks.com and use the code morning123, all one word, morning123. You can put the code in at checkout. And so at checkout, just where it says it would ask for a promotional code, put morning123. It'll take 60% off your order. And that's good for tomorrow, today and tomorrow. So feel free to go to drboycebooks.com and the code is morning123. I'll also text it out to you a little bit later. So make sure you're on the text list. Like you could be on the text list for Money in the Morning, our financial consciousness training, by texting the word morning to 87948. So text morning to 87948. I think you'll get a lot of benefit and a lot of value from our Money in the Morning classes. A lot of people seem to like it. Thousands of people are now watching it every day. So it's really exciting that we have so many people that are really interested in not just wealth building, but conscientious wealth building from a Black perspective. Black wealth building. I believe Black wealth building is different from wealth building in general. It's different from white wealth building. It's different from Jewish wealth building. Black wealth building to me means building wealth using addressing the specific and unique challenges and opportunities that come with being Black, particularly Black in America, but really Black around the world. Like I think that we have areas that we're better than other people, but then we also have areas of that we have to overcome, challenges we have to overcome. So, for example, undiagnosed, untreated trauma and how that's impacted our wealth in the trillions. We have to address that. We have to heal because if you don't heal from the trauma, then it's very, very hard to build wealth. It's very, very hard to build a business when you have a bunch of angry, traumatized people trying to work together. It doesn't work out very well. So that's why we created the first ever Black financial therapy department in the Black Business School, because we believe everybody should get Black financial therapy. You have to form a new relationship with money, a new relationship with with your family, a new relationship with yourself in order for you to really be your best self. So that's what financial consciousness kind of does. So text morning to 87948 if you'd like to join us. All right, so let's see here. Have you seen anything about EBS stock? It's linked to the monkeypox epidemic. EBS. Oh, buddy, that monkeypox. Lord Jesus, man. Oh, I saw the monkeypox stuff and it was like, oh Lord, oh my God. Okay, so let me check EBS. Let me look it up. EBS. Okay, EBS is Emergent Biosolutions. That stock is down 20% today, though. It's up 71% in the last 3 months, though. Let's see here. Is there anything about this stock that makes me want to buy it? Not really. It looks like it's losing lots of money, but the stock did take off because of the emerging monkeypox epidemic. Health stocks are surging after the World Health Organization declared a monkeypox global emergency. Oh God. I ain't got time for another pandemic, man. Lord Jesus. Especially not a monkeypox one, because you get it wrong, you're gonna have all these nasty scars on your body. All right, so it says here, yeah, okay, so apparently they rang the alarm on the monkeypox outbreak, which means somebody's gonna make money. Whenever there's a pandemic, people get rich, just in case you don't know how this game works. The stocks of two vaccine makers surged on Thursday after the World Health Organization upgraded monkeypox in the Democratic Republic of Congo to a public health emergency of international concern. Shares of the Denmark-based vaccine maker Bavarian Nordic spiked 70% on Thursday in Copenhagen, and the stock of the U.S. pharmaceutical Emergent Biosolutions (EBS) rose 6%. Let's see. Okay, so this Bavarian company, can we buy stock in that? They didn't give the ticker symbol for that one. I'm gonna buy some of this stock because I guess if this monkeypox thing happens, I want to make some money for. My wife and I bought what was it? It was one of the pharmaceutical companies. I forgot which one. Not Merck. I forgot one of them that was literally on the verge of bankruptcy, and literally the company went up, like the valuation went up by billions of dollars, and the stock went up from like $5 to like 60 or 70 or something. I can't remember which one it was, but we happen to own Moderna. Thank you, Wyline. Thank you. Yeah, it was Moderna, and we bought Moderna before the pandemic, and we made a killing from the Moderna stock. So just know that like all these pandemics and stuff, there's always a money grab that happens in every emergency. Rahm Emanuel used to say that you never waste a good crisis. So, and I hate it. It makes me sad. I hate these. I feel like they manipulate us so bad, but whatever. That's my opinion. So it doesn't have to be yours. All right. So emergent biosolutions. Here's what I'm going to do. I'm going to right now. I'm hopping into E-Trade, and I'm going to get ready for the monkeypox epidemic. The stock is trading for $9.62 a share. What do y'all say? You think we should buy some emergent biosolutions? Next time, y'all should bring, maybe next time for class, bring your like open up your apps and just let's just buy some stock together. I think that would be a nice little fun little thing. So here I'm gonna buy, let's see, it's $9 and something. So let me buy, I don't know, I'm not gonna buy too many. I'll buy 40 shares. 40 shares would cost me $386. Probably should have bought more than that, but it's okay. I'm gonna buy it. All right, so I placed the order. So now I'm invested in monkeypox. So there you go. All right. So hopefully that investment will not work. I hope it fails miserably because I've seen you ever seen monkeypox? It's nasty. Anyway, Karen, I have Apple stock. I've made over $950 in the last 3 years. Now it's 19% of my portfolio. How do I calculate that to get it back down to 5%? Okay. Great question, Karen. Karen. So what you would do is take the total value of your portfolio and just figure out what's 5% of that. So if your total value of your portfolio is $10,000, 5% would be $500. So if you wanted Apple to be less than 5% of your portfolio, you would reduce your stake to the point where you only have $500 worth of Apple. But also remember this, that 5% rule is not hard and fast. Warren Buffett violates that rule all the time, and he's pretty smart. So don't think that you have to be at 5%. But what I don't like so much is when we get to the point where a certain stock is 60, 70% of the portfolio. I don't think that's healthy at all. The ticker symbol, Barbara, was EBS. Yeah, somebody type EBS in the chat. Epsilon Beta Sigma. Thank you, Amani. All right, let's see here. Last question, and then we're gonna bounce out for today. Barbara says, if one knows nothing about investing in stock, which class do you recommend? I recommend starting with the blackstockmarketprogram.com, THE, theblackstockmarketprogram.com. The first month is free. We start from the beginning. We cover everything. It's been around for almost 9 years now, and I save everything. I save everything. So you can literally go back and see lectures done by the fat Boyce Watkins back in 2016, 2017. And I save everything because I want you guys to have access to whatever you want, but don't try to go through everything or it'll drive you crazy. We tend to try to over deliver with more than what you need. Just because that's better than under delivering, but sometimes it can feel overwhelming if you feel like you have to go through every single thing. What I want you to do is pick and choose, and I want you to also do a kind of a more relaxed type of learning, where if you just sit here and you just listen to me talk about stocks for a little while every day or every couple of days, you're gonna eventually understand it really well, and you're gonna understand it instinctually. So learning doesn't have to be memorization of a bunch of facts and information. It's really it's culture, it's conversation. It's just like if I want to be a great rapper, I don't go take a class on how to rap. Like that's what those corny white people do, right? Like don't go take a class like that lady who was breakdancing in the Olympics looking like a damn fool. Did y'all you know that lady was a professor of breakdancing? Did y'all know that? She literally I'm like, how do you get a PhD in breakdancing? I didn't know that that was available. And so anyway, she literally is a scientist of breakdancing, but she can't dance for nothing. So she studied it, but she can't do it. The best breakdancers are people who just out there just practicing every day, trying different moves and working out, just doing their thing. And next thing you know, they're really good. So I think that the financial version of breakdancing would be just get in there, just get in the space and just kind of learn it. The best people that are good with money and wealth tend to be people that are in a culture that where wealth is just in the walls, wealth is just in the air. If you're in a wealthy family where they're all thinking about estate planning and investing from birth and ROI and all that, you don't have to take a class because it's just in you. It's just there, right? So that's what I really want. I want us to have a space where if you just hang out with me for a while, like eventually stuff will just be there and you won't even know where it came from. And that's a fun, more relaxed way to learn anyway, without all the pressure. So don't be intimidated. Just take your time, just go through some content, just be consistent, and I guarantee your investing acumen will go up quite a lot over time. All right. So I'm gonna let you guys go really quick. If you want to join us for Money in the Morning, text the word morning to 87948. That's morning to the number 87948. Also, if you'd like to get a copy of my book, The 10 Commandments of Black Economic Power, or our financial flashcards for children, our financial workbooks for children, my wife's workbooks on financial anxiety, stuff like that, you can get 60% off if you go to drboycebooks.com. And on checkout, use the code word morning123, all one word, morning123. They're going to ask you for the promo code at the end when you check out. Make sure you put it in there, morning123, and it'll take 60% off. And that's true for today and tomorrow. That's drboycebooks.com. So have a good day, everybody. God bless you, and I will see you all very, very soon.